Hello, my name is Tim Gregory. I'm from Vermeer Investment Management based in London. I hope everyone is doing as well as they can at these challenging and very unusual times, and that friends and family are also able to stay safe as possible. I'm going to update you today on some thoughts on the market, on where we've been and what sort of factors are going to drive markets from here. Clearly, after a very big sell-off, there's been a very strong rally, but in the last few weeks, markets have somewhat consolidated at the overall level, particularly for the S&P 500, albeit that there's been a lot of shifts, within the internal sector moves and individual company moves as people sort out what sort of sectors and what areas of the market that they want to invest in going forward. Now, going forward, obviously, we've seen a massive Fed intervention that has helped stabilise market, reopen bond markets, which has really helped a lot of companies to refinance, and many companies like Boeing and Apple have taken full advantage of lower interest rates and open markets to get their business strongly financed. And that has helped improve sentiment a lot for markets. And obviously exit strategies are also proving to be very important in driving markets going forward. One of the things that, having said that, has somewhat pulled markets back and keeping markets in check is the relationship between China and the USA going forward. And obviously, this is going to be quite difficult. President Trump has been in a situation of tension with China in the past, with trade wars. And now again, we see a situation where the president is calling out a situation where China, where of course this deadly pandemic first began, may have to be called to account for what has gone on. And this clearly is going to lead to tensions. And in a run-up to a very important presidential election in November, it's almost impossible to imagine that this won't become a clear narrative for the market and for policy going forward, and is very likely to shape markets. So it's very important to note how these things develop. But it's ironic that at the same time as this is happening, the Chinese economy, which was obviously the first to shut down, is now largely reopened. And during the results season, we've listened to a lot of calls and a lot of companies saying how their businesses have bounced back quite strongly, particularly in the industrial area, and a continuation of strong retail sales online, even if visits to stores have not fully returned to normal. And for the market, this is obviously going to be important, that not just the Chinese economy continues to recover because of its very important influence on global trade and global GDP, but that European markets, which were the second big area of the world to be affected, particularly countries like Italy, Spain, and the UK, that they also reopen. And alongside that, we of course have seen that the US has been somewhat different, and some states are already to a degree trying to reopen and try to re-normalize the economy. And the success or otherwise of these strategies is going to be absolutely vital on how markets continue their pace of recovery going forward. In the longer term, of course, we'll have to see how deep the recovery is, how long lasting, and hope that there is no second wave. And the impact that a second wave would have on economic recovery and slow the pace of recovery down again. So we think those are the most important factors that are going to drive markets in the future. I hope everyone is safe, everyone is able to stay well, and that friends and family are in a similar position. Thanks very much for your time today, and I look forward to speaking to you again soon.